and it is going to be a beautiful show indeed. On today's edition of FESBC Market View, we are kicking off with the business news that's shaping tomorrow's economy. First up, the Provident Fund conversion bill that is set to be tabled early next year, as confirmed by Labour Minister Phila Buthelezi, marking a significant shift from Provident Fund to Pension Fund. And in a major development, the Eswatini National Provident Fund has already invested 59% locally, a move CEO Futhi Tembe says will ensure substantial returns for its members as the transition takes shape. Next, in our Enterprise Watch, we turn the spotlight on an exciting development from the Federation of Eswatini Business Community, FESBC. Their mission to link members to bigger markets is gaining traction with recent engagements with small-scale business holders from Ebuseni Umphakathi that is already providing rather successful resource mobilizer. Sibongile Sikudla says even more transformative measures are on the horizon, setting the stage for a new era of business growth. Really interesting developments happening with FESBC. We will then have an in-depth conversation with Sanele Sibiya, a conversation that couldn't be more timely or more urgent, if you like. The Eswatini Higher Education Council has just unveiled findings from the National Labour Market Skills Project. It highlights a critical issue, the growing skills mismatch. Employers are struggling to find the right talent, and Dr. Ngamsile Motsa explains that this gap is a major roadblock to growth. With the stakes this high, I'll be joined by financial expert Sanele Sibiya to break down the findings as well as try to explore the solutions that could reshape Eswatini's labour market. Finally, we are going to wrap things up with our market analysis. We want to take a closer look at today's market movements. Stay with us for a pack show. All right, thank you for staying with us. Let's dive straight into our business news now. By early next year, the Eswatini National Provident Fund conversion bill will be tabled in Parliament. This has been said by the Minister for Labour and Social Security, Honourable Phila Buthelezi, during a workshop for portfolio committee members from Senate and the House of Assembly at the Happy Valley Hotel, Ezulwini, on the conversion of the Provident Fund to a pension fund.
Here to sensitize portfolio members from both houses of parliament on the conversion bill, which they've heard about in the media, in various forums, but we found it prudent to unpack it for them to understand what really this is about, as it's envisaged that we'll be transforming the Provident Fund into a national pension scheme, and in doing so, it will allow members of the fund to benefit even post-retirement. And it also looks into incorporating those that are in the informal sector who are currently unable to be members of the fund. We are talking of bus conductors, we are talking of those who are low income earning. It could be street vendors, they'll also be accommodated. It could be anyone who is willing. Currently the bill has been submitted to Cabinet. We, as a ministry, we have an obligation to present it before them, explain, incorporate any amendments which they may feel are necessary to make it a success. Then once Cabinet blesses the bill, hopefully before the end of this year, we will be more than ready to table it in Parliament early next year so that we can have enough time for Parliament to consider it, engage stakeholders, and then come up with a bill, an act at the end that will, meet all the objectives that this fund is being envisaged to achieve.
The Chief Executive Officer of Eswatini National Provident Fund, Futhi Tembe, was asked on how much converting the fund would cost, and this is what she said.
For the conversion to happen, there is no lump sum or contribution, capital contribution that will be needed for it to convert. And the reason for that is because it has been structured in such a way that there will be a 15-year contribution by all members before the start of a benefit payout to ensure sustainability of the fund.
Politicians have weighed in on the conversion, saying it is a good move.
Sibona ngathi kuyinto lenhle kuphendvula imibuto yemaswati levele bekanesikhalo lesikhulu ukuthi yati siya contribute thina kwendlela endlongeni but ukuhamba isikhathi ukuthi la ngifika sengiphelelwa amandla khona athi lidlela ndivongeni hayi mina naku sengiyakunika lobo solukubeka bese liqiniso linye siyalati imali ungamnika ilamsam masinyane sayiphelile kanti lokhu sikubona ngathi lokhu sinyuda abovela vele fastelweni ngenyanga sicabanga ukuthi tabe kuphendvulela omkhulu inhlupheko emaswatini lebeyikhona
ENPF kwanyalo masoyekela kusebenza uretayile ukunika sonke isizumbulu sakho kuphele inyanga kulabanye kuphele iviki sowude imali kodwa ke lokuguqula kutawusita ngoba kutawuphindze kwetfule nalomthwalo kuhulumende.
The fund, according to the Chief Executive Officer, has assets worth 6.3 billion emalangeni. For FESBC Market View, Nelson Ngamandla, Vuminkosi Nzinisa, Ezulwini.
The Eswatini National Provident Fund has invested 59% locally, ensuring that significant benefits for members are there. Now, this was shared by the Chief Executive Officer, Futhi Tembe, during a presentation when detailing the conversion of the fund to a pension fund.
As the Eswatini National Provident Fund looks into converting to a pension fund, they have committed to keeping members' finances safe. The Chief Executive Officer, Futhi Tembe, gives the financial performance of the Provident Fund this year.
In terms of the investments, we are invested 59% in the local economy. And the reason for that is because our vision is to be the main contributor in the socio-economic condition of the country. And just to state that the local investment of 59% is distributed amongst the investment properties, which is 20%, and the remainder is unlisted investments, which are investments in the likes of Montigny, IDCE, Happy Valley, and also Lojaf, just to mention a few. Maybe also just to mention that the fund has grown when we compare this year to last year's financials. For the year ended 30 June 2024, the fund's assets have grown to 6.3 billion. Last year we had reported 5.5 billion. And members' funds have also grown to 5.5 billion from 5.2 billion. And what we're happy about as ENPF is that our assets are able to cover the members' funds, meaning that we are fully funded. In terms of membership, the fund's membership has also grown to 167,000 from 160,000 in the previous year.
The Chief Executive Officer has promised that all is being done to keep stakeholders informed about the intended conversion. She says more consultations are yet to be done. For FESBC Market View, Nelson Ngamandla, Vuminkosi Nzinisa, Ezulwini.
All right, that's how we wrap up our business news. We go for a net break. We'll be back quickly and we'll get into our Enterprise Watch.
Sabatandi ukuthi njengalokhu
Sivile sive sitikhulumeni.
Thank you for staying with us. You're still watching Market View. This is the FESBC edition. Linking members to big markets is one of the top priorities of the Federation of Eswatini Business Community this year, as evidenced by the successful recent engagements that they've had with small-scale business holders from Ebuseni Umphakathi this week. Now, resource mobilizer Sibongile Sikudla says more measures are being done to transform the way the members do business. Let's take a look.
Buseleni was a very huge success because farmers
were gathered to listen to what the markets are looking for and how they buy. For instance, ShopRite was explaining and answering questions from farmers how they can buy and how they buy to farmers, the compliance issues. There was a lot of learning there. The same thing for the markets of legumes, like Smiling Through, buying beans from farmers. They were also explaining how they buy. So we are linking information of markets to producers, particularly farmers, how they can go about doing the farming so that exactly that production suits the market of the day. One of them was the volumes, what kind of volumes the market is looking for. For instance, if it's 10 cows in a week going to ShopRite, then it should all go through the abattoir. As much as your chickens and as much as your goats, as much as your pigs, as much as your sheep, it should go via an approved abattoir by the Ministry of Agriculture with a health certificate. So farmers now know that that should happen, and they know that they are at liberty to do pricing, because pricing should be a figure that comes from the farmer, and then we negotiate with the market after that. So that was one. But when it comes to now the legumes as well, it is clear that, okay, the market is looking for sugar beans, not any other type of beans, because they are the beans that are needed for the market. Then we promote those kinds of products and ensure that we link as much as possible to knowledge. How can you do your watermelons? What is the exactly the size that you should look for? Same thing as potatoes, same thing as onion. We discuss as far as that with the market, and FESBC is making sure that is making use of the agricultural component of herself, which is Sivuno, looking for farmers to look for a better harvest for themselves and get good money out of their good harvest. As we look at all the options, and we notice that there are some entities that have been mandated to carry this mission, like NAMPOD, like an NMC, and like Eswatini Bank. We want to ensure we line up and link up with those entities, and we've already been doing some workshops to ensure the farmer is knowledgeable all the time, towards ensuring that their production is also recognizing the greening activities, and also is also recognizing that the environment and also the standards that are there. So we're aligning farmers with all this kind of information, and we think it's happening, and the farmers are appreciating also, especially when they see a market talking to them. In most cases, they just do farming and they do not even know where they're marketing. They're going to be marketing their product. But it's different now. We want it to be different from 2024 going forward.
Really exciting, urgent and important initiatives there by FESBC to transform businesses for locals in Eswatini. Let's go for that break. We connect with Saneless Bia virtually after the break.
Sabatandi ukuthi njengalokhu
Sibile sive sitikhulumeni.
Welcome back to our first big market view today. The Eswatini Higher Education Council has unpacked the National Labour Market Skills Project. The Research, Monitoring and Publications Manager, Dr. Ncamisile Motha, says the study is very critical in addressing the skills mismatch, which most businesses have reported to have greatly contributed to employers having difficulties in finding suitably skilled workers.
The aim of the study is to address the problem of the skills gap, the surpluses, the mismatches, which we are currently experiencing as a country. So, which has led to a number of employees in the country resorting to exporting skills from other countries, whilst our graduates remain unemployed. So, the study builds from the National Labour or the National Skills Audit Report of 2021, which clearly articulates the priority areas. So the difference with this study is it will not only point us to the focus areas that we need to focus as higher education, but it will also give us the numbers. You will remember that ISHEC is responsible for regulating higher education. That is, we register institutions and we also accredit programs. So having the numbers will help ISHEC redefine higher education by registering institutions and also accrediting programs that align with the needs of industry. What is happening presently is numerators that have been commissioned by SEPAC are visiting business community, industries, higher education institutions, the public and private sector, and also interviewing graduates who have graduated in the past 5 years.
All right, there was the National Labour Market Skills Project being unpacked there. Sanele, we know that the skills mismatch has been identified as a major issue for employers, but how deeply is it affecting the growth potential of businesses, particularly in key sectors of our economy?
Hi, good afternoon, Mr. Newman, and good afternoon to the viewer. So what we are seeing here is if you look at the unemployment rate, and more especially amongst the youth, you can see that it is actually skyrocketing above 50%. And, when you look at the interesting findings of the 2021 skills audit report, now it did show to some extent that, businesses aren't necessarily willing to hire, but the issue is the graduates that we have are just not aligned to industry expectations. So what this then speaks to, Mr. Nxumalo, is issues of productivity. So that means we are not getting the output that we would ideally expect to get out of a graduate, purely because their skills are not necessarily matched to what we are looking for. So what we are looking into now on the broader picture is that lost GDP potential, which we are not gaining as a result of not employing our labor force or not utilizing our labor force to the optimal levels.
Yeah, I hope we still do have enough time to perhaps answer the question that, given the ongoing research by the Eswatini Higher Education Council, what do you think are some of the root causes of this mismatch? Are we looking at a gap in education, training, or perhaps even how businesses are defining the skills that they need?
My own anecdotal analysis, Mr. Nxumalo, is the fact that our education system is just not moving as fast as businesses are always trying to evolve. So we have a static education system that's not moving as fast. I mean, we're now talking of the fourth industrial revolution, but if you can take your time and look at the primary school curriculum, look at the high school curriculum, and you look at the tertiary curriculums that we have in the country, there are still those that are probably being used back in the 80s. So that's one of the things that I see happening with our education system. It's just not evolving, it's not changing with the times, it's not being improved towards being relevant in the times that we are living in. And you can't fault business for that, because business always looks for profitability, Mr. Nxumalo. If, for example, business needs skills that are going to improve or enhance their use of technology, then you can't fault them, because they have to stay competitive in the global markets. So I think what needs to respond here is the labor supply supply markets. They need to sit down and, reevaluate and move with the times so that what we produce there remains relevant for the market. Because if it's not relevant to the market, you will see that what we are going to have is an excess supply, which I'm putting quote unquote, because if nobody wants to utilize it, then I don't even think it's an excess supply. It's just a product that has been produced and that nobody is using. So what we need to do in that case, again, goes back to the education system. Do we have training and retraining programs? If you look into countries like the UK, it's not like this is something that is only specific to Eswatini. Countries go through these phases where you need to retrain your graduates, not just with a couple of years or a couple of months. You could transform the graduates into something that the labor market can use because they already have a good base. So what we need to have as a country is that retraining model. And also we need to dig deep into the education system and look at whether it produces a graduate who's going to look for work or not. And what are we doing about that? So I think for me, it's just an issue of a system that's not moving with the time.
A system that surely and hopefully is going to be fixed. But you're very right, and hopefully we do see in the future, projects like what government has done with the United Nations Development Program in placing graduates in different institutions, getting extended and strengthened. Thank you, Sanele. You are not going anywhere. As we go for a net break, he will explain to us why the U.S. markets today are in a positive territory, as well as all the other indices after the break.
sabatandi ukuthi njengalokhu
sivile sive sitikhulume.
All right, our market analysis today, we start by looking at the U.S. markets. The indices are largely in a positive trajectory and territory. How significant is today's rebound for investors? Sanele Sbia unpacks that for us now. Sanele, the Dow Jones leading the way at a 0.79% increase. Are we seeing sustained confidence here, or is this just a brief uptrend?
So what we are seeing there, Mr. Ngumalo, is the fact that, we are now in earnings season, and about 79% of all the companies that have declared their earnings have actually surpassed market expectations. So that has actually reinvigorated, investor sentiment within the US. And if you look at the the DIA, you will see that, companies like the Taiwan semiconductor manufacturing company TSMC has actually posted very good earnings way above market expectations, and that has actually reinvigorated some enthusiasm into the semiconductor market and the artificial intelligence market, which was actually moving markets. And we are waiting to see data coming out this week, and we're waiting to see the jobs data that will be released tomorrow, which might slow things down a bit as we go into tomorrow, because that's what
Okay, I think we are losing Sanele, but he was explaining that positive territory you just saw on your screens right now. Everything is on the green there in the U.S. markets, and it's a rebound for investors, maybe particularly with the Dow Jones leading the charge there, 0.79% increase, and of course perhaps speaking to a sustained confidence or just a brief uptrend. But European markets are also showing us a robust performance today. CAC 40 surging by 1.26%, as you see there, and the DAX at 0.83%, while the FTSE 100 is on 0.48%. We do not know whether this rally reflects economic resilience or we're just witnessing temporary optimism, rather, driven by external factors. But that's a very, very big possibility considering what is happening globally. But of course, with the Asian markets as well, today what is seeing across the board is sharp declines, and one wonders what really this speaks to with regards to the Asian markets. Nikkei 0.69%, HSI negative 1.02%, and SCI at negative 1.15%. Does this speak to underlying pressures fueling this downward trend or geopolitical issues? We do not know really, but these are the numbers today. We also want to ask how this might affect investor sentiment heading into the next quarter. South African markets closer to home, JSE all share markets. What we are seeing there with that index is a modest gain of 0.17%, and global market dynamics at play. Insulated is the South African market from broader economic pressures, and the key sectors that are, of course, driving this incremental rise in South Africa. I've been seeing what has been happening in South Africa over the past couple of days. Tito Mbowene's passing. We've seen a few conferences held by President Cyril Ramaphosa. We see what they're trying to do with their oil reserves in attracting investors from the global market. And you want to juxtapose that, of course, with some of the engagements that they had in the United States of America. We saw a meeting with Elon Musk, potential businesses on the pipeline there coming into South Africa. So the market could be on a potential healthy trajectory, but we really don't know what is pertaining. We can only assume. Eswatini markets, ESE all share index remains stable, perhaps suggesting Eswatini's resilience amongst, or rather amidst, international market volatility, as we saw with the European markets. And we ought to really wonder if there may be upcoming shifts that we should be prepared for. But what we do know is that His Majesty the King is in Italy right now with the Eswatini Investment Promotion Authority. The Minister for Commerce, Industry and Trade is there as well, particularly quoting these two entities because they do speak to, trade in Eswatini and making sure that our economy is at a very healthy trajectory. Commodities, perhaps with the last remaining 2 minutes, what you're about to see on screen is gold, of course, edging up, positive 0.42%. Brent crude, as you can see, 0.22%. Movement signaling a strengthening of safe haven investments. And, with commodity prices influencing, of course, the global economic stability in the short term. Investors really, really happy with what is pertaining here. Currencies, as we wrap up the show, rand strengthening slightly against the dollar and the euro, but with continued volatility. Currency movements indicating maybe investor confidence once again in the region's economic outlook, especially with the USD compared to the SZL there. It's really, really interesting what is happening there, but it's down by 0.46%. That is our fair attempt at analyzing the indices of the day. Hopefully, Sandler's Beer, when he connects with us next week, we won't have these issues, but we can never really be sure with how inconsistent network can really be. But thank you so much for staying with us on the program today. This has been the FESBC edition of our Market View business program, which airs from Monday until Thursday, except for Wednesdays. Thank you so much for staying with us. Have a lovely afternoon. Bye-bye.
Thanks for the kind words, and congratulations on your first defense ministerial. And you're right, I have been here a couple of times. This is my 14th defense ministerial. And each time it gets better and better. It's a real delight to be back in Brussels. So today we'll have an opportunity to build upon the vision that we set out in July at the 75th anniversary summit. It was a really, really good event. The critical work is, our focus on defending the territory and people of every country in NATO. And in that vein, I think we got to work together to strengthen defense and deterrence, and I look forward to some great discussions on that. As you've mentioned, we do have our partners from the Indo-Pacific here with us,